And if you think the euro crisis is beginning to ease, it's a question we took up earlier. Think again, says the world's biggest bond fund manager. A top portfolio manager at Pimco tells Sarah Eisen the risk of a double-dip recession in Europe is growing fast. Sarah?
Eric, Pimco was already worried about Europe. Now it's even more discouraged because of the way Europe has responded to the debt crisis, because some countries are slashing budgets sooner than expected.
We've been a bit surprised by how quickly even countries that don't have austerity forced upon them by the market are willfully heading down that path. So if anything, it's made us bring forward our expectations for a drop in growth and a drop in inflation within the Eurozone, because we're really seeing much more austerity being rolled out much sooner than even we forecast.
He mentioned Germany and the UK as examples of countries where austerity wasn't called for immediately. Those tough spending cuts make it even harder for sluggish economies to grow and increases the odds of a double-dip recession. It's one of the main reasons Mather tells me there are still a lot of headwinds for the euro. Even on top of the 15% plunge we've seen against the dollar so far this year, that and rising risk of political tensions in Europe. We've seen the euro pop a bit this week, Eric. Many are wondering if that's the beginning of the end of the euro's problems, but Mather tells me it's just temporary. Expect more pain, and that is why Pimco is cutting back investments in euro.